I remember when I first started trading, the first time I saw a trading chart, I was really confused. So if you're a beginner trader and you feel super confused when you see a trading chart, don't worry, you're not the only one. The good news is, in this video, I got you covered. I will be breaking down the basic on how to read a trading chart and explaining in the most simplest way how to read a trading chart specifically using candlesticks. So by the end of this video, you will feel confident and ready to read any trading chart. Well, enough talking, let's get into it. Currently, I am on TradingView. So TradingView is the platform I'm using for my charting. All right. So if you know, I'm mainly using Weibo for my trading education, but I like to use TradingView for my charting. So TradingView is my preferred trading platform. And I don't know how many of you guys are using TradingView, but I'm just gonna give you a quick rundown on how it looks right now. So on the top right here, pretty much you have the time frame. So right now I'm currently on Apple and on the daily time frame. So day stands for daily time frame. And down here, pretty much the timeline, and this right here is the price of the asset. So here that'll be the price of Apple. So let's talk about how to read a trading chart. In the trading world, there's different way to read a trading chart. So this right here, what you see right here, is called candlestick. That's not the only way to read a trading chart. So if I go here, all of this right here are different ways to read a trading chart. So I'm just gonna show you guys the most common one, and I'll be talking about the one I like to use. It's already obvious, candlestick, and why. And we're gonna go deeper into it. So we have bars. So and depending on what kind of trading information or book you actually read or video you watch, you probably see this might be familiar. Some people, some traders prefer to actually read a chart like this. Depending on what kind of way you're trying to read a trading chart, the tool you use will give you different information on the price action altogether. So this right here is one way to actually read a trading chart. Those are bars. And the second one, candlestick, candle, already talked about that. The third one I'm going to go over really quick is the hollow candle. Pretty much similar to candlestick, pretty much same pattern. But you can see there's some candle pretty much are hollow and some are pretty much full. All these are here a different way. And one of the most common one too is line. So on CNBC or the news outlet, that's the type of chart that they like to show. Or this one, the area chart right here, the area line. Alright, so this right here, when you want to see on CNBC or Market Watch, that's the type of chart they like to show in general, showing the whole history price action of the asset you're trading on. And yeah, and another common one would be this right here, Henkin-Hashi as well. So some people actually love to use Henkin-Hashi as well. So those are the most common one I see. But there's so many options as you can see here to actually read a trading chart. And my preferred one, as I said, is candlestick. So candlestick is also the most common one. The whole concept came from Japan. I think it was from a trader who was trading rice and actually came up with this type of price action reading to have more information about the daily transaction that actually happened during the day they were trading rice back in the day. And we're gonna actually learn to read a trading chart based on how those candles have been formed and what each candle actually means. So quickly, I'm gonna go over and talk about the anatomy of those candles, so we know which body part when looking at the candle and what it actually means. So this right here, we have two candles. So we have a green candle and a red candle. All right, so two different candles, and we're gonna talk about what they actually mean. So based on the graphic that you see here, you can see it's already self-explanatory. But we're gonna go deeper and see what they actually mean. So first, when we see a green candle by default, green candle stands for a bullish candle, and a red candle stands for a bearish candle. So red, pretty much bearish, so pretty much for the sellers, and green, bullish, pretty much for the buyers. All right. And that's the most standard way to actually see a trading chart. And each candle are pretty much the same body part all together. All right. So here we have the high, pretty much mean the highest price the stock traded at. We have the low point right here, and meaning that's the lowest price that the asset is traded at. And we have the open body part, and pretty much stand for the open price. So when the day started, what was the price, all right? And the close, pretty much the closing price. So at the end of the day, where the stock closed. And from the open to the close, that's the body of the candle. And these bars right here are called wicks, right? Those are wicks, and I'm gonna go deeper later into that and why that actually happened. Not every candle has wicks. More often than not, you're gonna see this candle having that wicks. So all these different components that you see here mean something in terms of price action and give more information about the asset you're trading on. So that was for the bullish candle. For the red candle, pretty much the same thing. High mean highest price, open where the price actually opened at, the close where the stock actually closed, the low, that's the lowest price the stock reached, and the body of the candle right here. So the main difference between a bullish candle and a bearish candle is where they open and where they close. So if you look at the bullish candle right here, you will see that we actually open at the low right here and we close above. So we go from bottom to top, right? So the direction go from bottom to top, right? So that's the bullish candle. We open here and we close here. However, for the bearish candle, it's pretty much the opposite. They open right here and we go down. We open here, down. So the direction is from top to bottom. And that's because if we have a bullish candle, that means the buying pressure is more higher than selling pressure. The stock's supposed to go higher, so we go up. And if we going down with a bearish candle, so they have bearish momentum, sellers are more in control. That means the stock price is supposed to go down. So in a bearish candlestick, the open price should be higher than the close. And in a bullish side, the open price should be lower than the close. That's simple, right? So in a bullish candlestick, we need to close higher than where we open. In a bearish candlestick, we need to close lower than where we open. Simple. So this right here is pretty much the way to actually read a candle. So every time you see a candle, those information will be delivered to you. You can actually see and have an idea where we close, when we open. And on TradingView, every time you actually go on a candle, the platform gives you all those data all at once. I'm going to show you guys on TradingView. So we're back on TradingView, and you can see right here we have a bunch of green candle and red candle. So for every candle that you see as red, that means sellers were more in control of the price action than buyers, and wherever you see green, that means buyers were more in control than sellers. That's what it means, right? So here we're gonna also briefly talk about time frame. So because it actually matters, each candle means something in different time frame. So right here I am on a daily time frame that you see here. I'm on a daily time frame, 1 day of price action, meaning each candle that you see here represent a data of 1 day of price action. So if you go to 1 hour here, you see that each candle that we see here represent 1 hour of price action data. Let's go to the daily time frame. So on the daily time frame here, at the end of the day, if the open is lower than the close, right, we having like a green candle right here. So in this candle, certificate candle, the close was higher than the open. That's why it's red. In this candle, the open was lower than the close. That's why it's green. So this right here will be where you're gonna have different information for each candle. So you see O right here, that's the open price. H, that's the highest price. L, that's the lowest price. And close stands for the close price. And vol right here, pretty much the volume for the day since we are on the daily time frame. So all this right here also related to the daily time frame. So every time you are on a trading chart, anything you do will be related to that time frame that you choose to make your analysis on. So if we look at this candle right here on December 3rd, you see that the price opened at 239.81. The highest price was 242.76. The lowest price was 238.90. And the stock closed at 242.65. And so altogether, we have a move of 3.0.6 and the stock moved 1.28%. And the max volume for the day was 38.86 million. That means there was 38.86 million shares that have been traded on that day. That's what I like about a candlestick, because it actually gives you all that information, and all together as a combination can actually form pattern. Well, I'm not gonna go too much in pattern right now, but that's what it looks like. All right. So in this video, I don't want to make it too complicated. All right. So I'm just gonna stay at this level, and pretty much gonna make more videos talking about more trading chart stuff and how to go deeper, what it means as you start combining stuff all together, and down the line talk about entry, exit, and how to find them as well. So this is pretty much like a simple video for you guys that know how to read the trading chart. And if you have any question, let me know. Thanks for watching.